Our content is intended to be used and must be used for informational purposes only. It is very important to do your own research analysis before making any investment based on your personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our website or podcast and wish to rely upon, whether for the purpose of making an investment decision or otherwise. What's up, my future one percenters? This is Marathon Money, brought to you by Wincrease.com. I'm Cam Jones, Prince of the Stock Market, and I'm here with my boy, Kenny Coins. What up?
What it do? What it do, baby?
We got Jaron with us, too. What's up, man?
What's going on?
We chilling. You know, Jaron, we had to bring him on today. You know, we had to do it. Yo, but we gotta talk about the stock market. This thing been flying up. I wasn't expecting this right here. I wasn't expecting this. I don't think did we have a down day this week? I think every day was up.
Every day was up.
Every day except, I think, wasn't Friday like flat?
Well, I'm showing only on the NASDAQ like a less than 0.5% move, but that's still, I mean, it was still okay.
Oh, it was okay. It was still up then.
But I really wasn't expecting this. I'm gonna make a bold prediction right here because I was, kind of studying the NASDAQ, the Dow, and the S&P. I think that the Dow, before Thanksgiving, we're gonna have a big drop. I'm talking about like, not in one day, but I think we're going to drop about 2,000 points before Thanksgiving when it's all said and done.
Damn, bro. Whatever tree you smoking, go ahead and pass it over here.
You saying like in like one day or
no. Over
increments?
Overall, like before Thanksgiving, we're going to be around
Thanksgiving on the 28th. So it's about 2 weeks and a half.
Yeah, we're gonna be about two.
So you're saying we're gonna drop about 2,000 points. So we're gonna be at 25,600. I'm waiting for the ridiculousness to set in.
What you basing that off of?
Go ahead and ask him that, Jaron.
I might have to take that back. I think
I know his has a little big from the Netflix prediction.
I didn't mean that.
From the Disney prediction. I know his has big from the Teledoc prediction. He got a big head right now. He got some predictions in the book. You know what I mean? I made some predictions. My head ain't that big.
And the pipeline.
2,000 points before July. Well, you trying to have a panic attack?
That's another correction. That's almost 10%. Yeah.
Hold up. Let me correct myself. Let me give my own self a correction. I'm looking at it wrong. I think we're gonna be around 27,000.
Oh, okay.
About a 700 point drop. So
that makes more sense.
My bad, man. I'm looking at it wrong. Because once you actually said the number, I was like, yo, my number's off.
So a nice pullback.
Yeah, a little pullback.
Yeah.
27,000. So
which that is expected.
Forget that I even said 2,000. Yeah. Forget that I even said that. That was just absolutely stupid.
Yeah, because boy, you talking about recession on when they keep talking about recession, that would definitely.
If it dropped 2,000 between now and Thanksgiving, it's probably
that's a recession.
We got some issues.
Even remember at the end of the year last year was a 4,000 point drop, and that was wild.
That was.
Yeah, that was wild. You ain't lying. That was wild.
But overall, though, man, I wasn't expecting this to blow up like it did. Everything is still super overbought to me. And I just think we do for for a little bit of a pullback, which, I got my money on the sidelines. I'm going to be buying up.
I mean, right now the S&P is trading at like about 17 to 18 times, which is like cycle high usually. So it's like it's gonna need to be something to get it to go higher. Mm-hmm. And like, I mean, the main thing was like, the main thing I feel like was the trade war stuff. But like after it's been on like 2 years of like just nothing, and I feel like at this point the market like is starting to really not care anymore. Like it's just. Like I read a lot of articles that say like it's kind of normalized now. Like it's just it's part of the economy now.
We just talking. That's it.
Yeah, they're not. It's just talking. So like it's just what we're in.
So you think that this is normal? You think this is all this talk and everything that's just baked into the market?
Yeah, I think so now.
I mean, especially like even on over the week, because earlier in the week there was everyone was go ahead.
No. I was just gonna say I think Jaron makes a good point. I think just like the real estate market between 2002 and 2007, where for a long time everything was going up for a really long time. And then this is starting to look like that. But we've been going up since Trump's been in office.
That's not a long time, though.
4 years?
No. Actually, 4 years for the market to go up. I don't feel like that's a long time. But if you think about it, we've been going up.
I don't know if you've been
right. I know.
Here's the point. I think I'm saying like I agree 100% with Jaron. Here's why. Because if you look at the market, man. Look, what Trump got in office in 2016, right?
Right.
Okay. In 2016, let's just say February 2016, the low was 15,503. Where are we at now?
Yeah, we had over 27, but you got to go back. If we talk about the market being up, you got to go back to like 2010.
Right. You got to talk about the cycle. We're about to enter the 10th year of the cycle.
Yeah.
I mean, the 11th year.
Yeah, but I'm just saying, bro, we have no big drops, not huge like 2007, 2008. We went up. If you look at 2001, if you look at 2003, we dropped. Then from 2003, we was going up for all the way up until 2007 October. Then boom, a big drop. So how many years is that?
That was about 2 years.
4 years.
2.5 years for the drop.
Mm-hmm. From 2003 to 2007?
Oh, I thought you were talking about the 07 to 2010, 2009 drop.
Nah. I'm just saying it's just been going up for a long time. We even had a drop in 2009 all the way to 2011. We had another big drop. But then between, I'm just saying, just take a look at it. 2015 and 2018, we had not 2018, 2016, we had a big drop, but now we don't. If you look from 2016 all the way until now for 4 years, there is no big drop. Everything's been going. We've been moving up almost 2,500 a year.
What were you about to say, Jaron?
I was saying, like, the way I'm looking at the market right now, I'm expecting it because, whenever the 10-year and the 2-year yield invert, that usually signals a recession, obviously. But people forget, like, I think the average timeline for that is 18 months, and then after that curve inverts, the market runs like it's expected for it to run for at least a year, because like you could even see like all of a sudden the Fed will start being a lot more accommodative and stuff. And I feel like it's basically like an artificial run for the next year to year and a half. So like I'm expecting it. But like once that flame runs out, then like I'm expecting a real high probability that it's over with.
What do you mean over with?
Like, that's what I want to know.
We going 50%.
50%?
50%.
It's going down.
Oh, you say 50%. We talk about 1930s type stuff.
Cam, I don't even want your tree anymore. Jaron, what tree you smoking? 50%, bro.
I go by the facts and the history.
Yo, I'm going by the facts in history, but 50%, but that'll be,
50%,
yo.
that's a lot, dog. I mean,
Look,
you
this-
figure if we by that time, you figure we would be at somewhere around, let's just say 30,000. So you saying that we would be somewhere around 15,000 before this is over?
If not lower.
Woo!
You're talking about we're going back to Obama days.
Pre-Obama
lower.
days.
I mean,
That's not pre-Obama. Like, if you say it lower, you're talking about 12, 13, 14,000.
Okay. Yeah. My bad.
I mean, like, this market has like so much. It's just like, I don't know. It's propped up. It's
Me
so
and
propped
Cam
up.
agree with you. It is propped up.
And I feel like especially like if you look at that space, like that run from after it broke out of the last high in 08 till now, like that, like space is so wide, and like there's a whole lot of stuff in the economy that's like unsustainable and like I don't know. I think
That's true.
I
agree with you. The space is wide between 2009 and now. That's a big, huge space. But 50% is kind of like, yo, that would not even be a recession. That would be a depression.
I mean,
I would have to agree right there. It would be similar to, that would be a depression.
You're talking about not just millions of jobs. You're talking about multi-millions of jobs being lost.
I mean, like a 10% unemployment rate, yeah. I mean, the peak to trough in 08 was 50%. Like,
yeah,
exactly
you're
50%.
right. It was 50%. You correct.
I guess it seems worse just because we up so high. You know,
right,
so the
like,
dollar amount's gonna be a lot.
There's like so much. There's like a bigger runway to run down this time.
But that was the example I was trying to tell earlier. If you look at between 2003 and 2007, that runway's short. If you look at this huge runway, there is no breaks. There was no big drops.
Right.
So you know what I mean? The higher something get, the longer it takes you know what I mean? The fall is gonna be greater. So 50%, yeah, I see where he's coming from, but you're talking about in 08, we lost millions of jobs. You're talking about between 2009 and now, Instagram was created, Facebook took off, Snapchat,
basically all the social media stuff.
All the social media, YouTube took off, Google, Amazon is in that space. Amazon was at 2008 was at $5. You're talking about multi-million of jobs being lost, not just millions, like almost double digits.
There's like,
and
part of our problem is like a lot of the companies, a lot of the margins and stuff like that that's been like improved to get us to here are not sustainable. Like, you gotta remember, through this whole cycle, the minimum wage hasn't even moved.
I thought they did raise it, or just
the minimum wage
private
has been
companies.
raised in 2009.
I think just private companies just been pledging.
Yeah, just private companies in some states, but like the federal minimum wage has been $7.25 since like 2009. So this whole cycle, the bottom wage hasn't even participated.
So he's basically saying there's people. I get what he's saying, but 50% is a lot, bro. Just because where we at.
That's a good segue into the short report that Jaron got, man. We're gonna try to do the short report on here, hopefully more often than once a month. But what you got, Jaron? Hold on, let me give you some breaking music real quick. Hold up.
So my thing is like, okay, so you know, in the Marathon Money group, I'm known as the short guy, or I don't know what extra be calling me.
Tesla hater, basically.
Tesla hater, all that. But like, so like my main thing is when companies run their stock up off some unsustainable mess, like once that crack shows, it's over. And like the stock tends to get murdered and murdered fast. So like right now, I mean, I know like all of us been talking about Netflix for forever, but like I have my actual thesis behind like why I think it's a good short idea and has been for like the past 6-7 months. So like, remember like a long time ago, I said Netflix is like Netflix is a mall that's losing tenants, right? It's an internet mall losing tenants fast.
You don't got to explain it to me. I already know.
Yeah,
Right.
already. Yeah, you don't gotta explain it to me.
So, and the point is, in order for Netflix to like stay the head of the game, like to stay like the kings that they are, they got to spend a whole lot of money on
Content.
And right now, they didn't already raise. I have to look again, but they raised tens of billions of dollars in debt over the past couple of years. They spend like $10 billion a year on capex just for content, and they mostly still rely on licensed content. So if most of the providers, like Disney and all of them, leave, they're gonna have to spend maybe 4 or 5 times what they're spending now just to stay viable, which isn't sustainable. And it's like that's like kind of like an actual thesis that you can look at and be like, I can get behind this, and as long as this is like the actual story, you can kind of hold a short position. I feel like, because and also like being on the working like high what I do for a living, I learned like a lot of this stuff. And a lot of the investors, like the big money, that's what they go off of. They go off of a thesis. And once that thesis is broken, that's when they start to exit positions. So then like once you can if you can get your eye and your ear to like the market and the reason why a stock is where it's at, and pay attention, and like when that crack starts to show, you see it in the technicals too. You see tops, you see toppy type patterns and stuff too. That's why I like to put it together. So
here's like I completely agree with Jaron, except for this one little thing. Here's the things about those theses that never. The thing about it is that you're just kind of just sitting there waiting until a crack shows that might not ever show for another 10 or 15 years.
And that's true. And that's true. But it's like, but something like Netflix, like but once you see it start to happen, it happens fast.
Oh yeah, I'm not saying that it happens slowly. I'm just saying before you might see the first crack, like Netflix, you might not see anything until 5-6 years from now, 7 years from now. And that I learned that, like I told you, I used to work for high investments and stuff like that on Wall Street. I'm telling you, it's like those theses. My biggest issue with them is that you could be 100% right, where you could be 100% right 10 years later.
Well, no, and look, that's why I say to the listeners, being short is a lot more difficult than being long, because it has a timing issue.
Yeah,
you gotta
it's like options.
Exactly, like shorting is just like options, but you get a longer timeline. But like most of the time you paying interest on that short position because you borrow in shares.
Yeah.
So you have to be very selective. But if you get it right, it pays off fast.
Well, if
the reward is massive.
If we just take Netflix and you look at from last year in June, maybe the high was $423, and then to where we are now, $290. That's roughly, I'm not going to do the exact math, but that's roughly a 35% drop in a year.
Right.
That's a big drop.
And like another thing, like you can look at it is the valuation charts. So like you can look at a chart of like a stock's PE, like, price to earnings. And like you can kind of see where investors kind of top out. They don't want to pay, like, let's say like Netflix is trading at 50 times. Like you might see a lot of topping out at 50 times because don't nobody want to pay more than 50 times.
Right.
And like you kind of see it starts to get exhausted. You can kind of match that up with the actual stock chart. You can kind of see like,
I'll never pay anything 50 times. That's ridiculous.
I think if you ever bought Tesla within the last 6 months, I think you paid more than 50 times.
Yeah, I didn't buy Tesla in the last 6 months. But no, but I get where you're coming from, and Netflix. Here's where like I agree with the 50% drop. Netflix is such a big part of the economy. Tesla is such a big part of the economy. There's so much things right now that were built into this economy that if they were to take a massive drop, like it would literally affect. It might not only affect the United States, it would affect the entire world.
Right.
Because if you look at it from just the stock market in general and have that direct perspective, it's like we cannot sustain where people are making $7 an hour and keep advancing in technology, and they expect us to keep moving forward.
Well,
there's no
I think
way
that the thought process is, and we all got to get into this. I think the thought process is that a lot of these things are going to be free.
Right.
That's a thought process.
But they're not, because there's nothing really free in this world. Even when they tell you free insurance, it's not really free. Somebody else is paying for it.
Right. But that's what, for the people that we're talking about, $7.25 an hour, they don't, really think like that. They just,
And then so like okay, then I had another call that I had. What I called this out a couple months ago. So another stock was the ticker is LOPE, but I think what it's called Grand Canyon Education.
Yeah.
And so this is an example of, so first of all, they're a for-profit school. So one of my things I like looking at industries that are just wrong, in my opinion. Like for-profit education is just wrong. And like throw all the stock stuff away, throw all that stuff away. For-profit education wrong, I don't care what nobody says, right? And it's just not sustainable because there's way too much public competition, even private competition that's not for-profit. So like this company, and also like even just to give the credibility.
What's the sticker symbol?
LOPE, LOPE, but it's called like Grand Canyon Educational or something like that.
Yeah.
So there's this guy, I don't know if anyone's ever heard of him, but his name's Andrew Left, and he has his company is called Citron Research. So I look at him a lot. I learn a lot from his research and his reports, and this is one of them. But basically, like they just are like a online education provider, and they're just falling behind because all like the public schools like that they're supposed to be like getting partnerships with are literally just doing the same thing that they're doing and don't need them for it. And
so
that's why I like
schools are like Disney and Lope is like Netflix.
Right. And like you can see two things, like you pay attention, right? And they're like, oh, we about to transform this, and we about to so basically they're like, we're about to sign all these partnerships with these high powered schools, and they didn't sign anything. They were like, we're talking like 5, 6 like huge schools they're about to sign with, ain't signed with nobody. And you could just look at things like that. And that's why that's been a good short that's been working for a minute. And it had a good drop on, I think that was Thursday when they had earnings.
Yeah, I see.
And stuff like that, and they just start to fall apart. And another thing you got to look at is like people. I don't know how people will be out there looking at like the record, like the buy sell recommendations that be out there.
Mm-hmm.
Like it'd be a lot of lazy analysts, and they'll just put a buy on a stock just to sit it there. And like this is a stock that has like all buys on it, but like they're literally shrinking, and like their market's going away, like they're just like they're dying. And
I thought I was the only one that noticed that about the lazy analysts. I feel like some of these analysts that they have on these sites, even on CNBC, man, they be so lazy. Like some of the markets are like they're not even going to exist in like 5 years.
Right. And it's like, I don't even know. And people just like really be forgetting like what regular life is still. People just be thinking in terms, oh, everything's a stock market. But like, come on, man, for-profit education.
So is it for-profit education? Is that like University of Phoenix?
I don't even.
Those commercials that come on and be like, yo, you
I
get your degree in like 2 days if you do this online.
I think was it
That's so true.
Bryan and Stratton, I think, is for profit. It's a bunch of them, but like I be hearing horror stories. Like I know people who went to them schools, and I be hearing like absolute horror stories.
Trump
like,
University.
that's in a category by itself. Not even for profit schools. That's just give us your money and go away.
Yeah, it's pretty much that's what that is. Give us your money.
You know, and like also just when it comes to like shorting, like you just gotta understand, like you gotta be very selective. You gotta keep up with your timing. If something don't work, you gotta get out. You can't just sit there and hope it work.
Yeah, I was about to say you got to be really aggressive because when I'm in options, you know, sometimes.
Oh, yo, listen.
If my option makes something just real small, like 5% in like a minute or so, I'm out. Like because I know how this stuff works. This stuff is up, down, and if it starts to just stay in one area, then you lose money that way too. You know, so you got to be real aggressive and fast.
Listen to this: for-profit education stopped growing after 2010. A lot of these profit education have gained massive student loan debt, which can never be recovered. A lot of schools have closed down. You remember ITT College, bro?
ITT Tech, yeah.
Yeah. You know what I mean? A lot of these schools, significant business failures and closing between 2015 and 2019. Dream Center College, Education American Corp. I never heard of something. I know ITT Tech, ICDC.
ICD.
I think what happened was didn't Obama put something in place for to make for-profit schools more transparent, and you have to, in order to be considered a school or a real school or something like that, you have to place a certain amount of people in jobs for a certain amount of time. And once he put that regulation on them, they couldn't, they couldn't
sustain.
Yeah, they couldn't sustain it.
I don't even remember. I like stuff like this. I just like to keep it so simple. It's like, just think about it.
Yeah.
For-profit education, like, it's just not sustainable. And you don't even have to look. You don't have to look deep. And you see it. Like like you said, there's a bunch of the other stock is called T2 or it's like TTWO, I think is the ticker, TTWU.
I was say don't give my boy don't give my boys a bad name, man. Take two. Don't give my boys a bad name.
All right, I'm trying. Let me see what the actual ticker is. I had it right.
Yo, Jaron might be onto something.
TWOU.
Okay.
And you can just look at certain industries, and another thing too you gotta think about, right? There's a lot of lazy investors too, right? Yeah. So there's people who just sit in stocks and don't sell it no matter what. So even if a company is dying, if no one's selling the stock ain't gonna go down. But eventually it will. And you gotta be wary of that too.
Well,
Jaron might be onto something, because a lot of this debt are on since 2016, over 350 colleges has closed down. Universities and colleges have closed down.
For profit or normal?
No, these are for-profit schools.
Okay.
Mm-hmm.
These
are for-profit colleges.
So instead of being short, would it be better for people to get puts?
It's so my only problem is the way I be looking at it, especially for the short report, is the whole kind of idea is you have the thesis, and the whole kind of idea is to hold the position through the thesis, to watch the thesis work out. And because you don't know how long it's going to take, at least being short, it's not as time sensitive as puts. But if it's something that you can be okay, I think on this earnings maybe, but
right.
I don't know, if you think you can really time it with a smaller time frame, 2 months, then yeah, I'd probably use options. But like a Netflix though, of course, I'm still in trader jail, but I've been holding it in a paper account for 6 months now, and just watching it kind of work. And that's kind of how I like to think about a lot of them like that, because you can kind of just watch it work. And I was saying, once the big money starts, the thesis falls apart, they exit, and they exit, unless it's like a really big like shock, like oh like they're about to go bankrupt, the stock could kind of go down over time, and that's what you kind of just take advantage of, just large sellers just getting out because the thesis is broken.
Yeah.
And
It sounds. I'm not gonna sit here and claim I know 100% because I don't research it to that point. But it seems like it's similar to when we were seeing GameStop drop. Over time,
Right.
Yeah.
that long drop. When we were talking about it at like $40-$45. It was just it seems like the same thing. Common sense, just a matter of time.
Exactly. And that's why what I be saying, people like want to just like short a stock. It's like the way I'm basically saying is to add an extra, strategy to it and a plan is just wait until like you see the thesis breaking, like you actually can see it. Once you see it breaking, yeah, it'll be down 10% already, but it's probably going down another 50.
Right. Yeah.
Here's I kind of see where your head's at with the 50% drop now. Look, man, all these schools are closing, for-profit schools.
You talk about the 50% drop, Dave? Talk about in the stock market or with this?
No, because this is going to affect the stock markets. A lot of these schools, man, was part of this called Education Corporate America.
So
this is
basically like the housing bubble, but it's the education bubble.
Yes.
Oh, I absolutely believe it's education.
Listen to this, man. For one college, so if that college closed down and the students don't pay that college back and they're closed, that college could have at least $150 million in debt. From 2016 until now, over 382 schools, colleges, and universities that were major for-profit education has closed down. And the average is $192 million in debt.
They're shams, in my opinion, at least.
Education Corporation of America are facing financial challenges.
Well, I mean, that's why we got the short report. You know what I'm saying? Lope, Netflix, right?
The Lope's on here too.
Yeah. Like and like the thing is, like, if you can kind of pick out something like, all right, for-profit education, but a lot of them are already dead. But if you look far enough, you can find something that's still up there. Like, even though Lope was at 132, it's at 84 now. But I mean, it's probably gonna go lower. I would think so.
Right.
Like it's been as low as in the 40s.
Especially when I'm always wary of something that has been going down while the stock market's going up. You figure these past 2 weeks, the market's been just ripping. How can you not go up? You know what I'm saying? So when the market does, at the beginning I said, before Thanksgiving, I can see it's at 27,000. Now when that happens, people like a Lope and Netflix, they're gonna get hit a little harder than everybody else because they couldn't even go up while the market was, at its top.
Yeah.
So, man, you got anything else, Jaron?
Also, like, when I like to try and look at them, so I try and look at like a company whose stock has ran maybe over the past 12 months to 18 months and like maybe 100-200%. And like that's where you can kind of see where the thesis came from. Like if you go and look, you can just look at like the press releases and just like things around the stock and just like look at what the management's been saying. And this is why I think it was like it was a long time ago, but we were like, people be forgetting all this information is out there for free. Like the 10Ks, the 10Qs, the earning calls, the press releases. Like you don't gotta pay for this. You don't gotta pay for this stuff. It's out there.
Right.
And that's where you can do your research at. And like a lot of stuff I'll be reading from the guy Andrew Left, like he just pulls this stuff just right off the internet, right out the company's 10K. And like if you just look like hard enough where people ain't looking, like all this stuff is like right there in broad daylight.
I might have to start doing something like that too, picking like one company and just do like my own little report on it and find out, which way I want to go on that stock. That seems like it's beneficial.
That's what I've been learning, because like ever since I got in the actual industry. So like, when I first started, I just did a lot of technical trading, but like getting in this industry, learned a whole lot about the other side, like the fundamental research.
Mm-hmm.
And if you can put both together, I think it's like it's a duo.
He's a bad man.
All right, man. We gonna wrap it up right there. You can follow me on anything, Instagram, Twitter, stock twits, whatever, at Camboni11, CAMBONI11. Also, follow us on Spotify. We on Spotify. Hit us up to join our Marathon Money chat. You'll have access to everybody here: Jaron, Kenny, me, Extro, and a bunch of other people in there that are pretty smart too. Make sure you support our podcast. Cash App Marathon Money. That's the cash tag. Where can they find you, Kenny?
You already know Twitter, Kendrick Collin, 2 N's in the middle. Hit me on Instagram. Hit me up on Facebook. Hey, man, hit us up on Spotify and Apple too.
Yeah. Where can they find you, Jaron?
I'm just on Facebook. You can find me in the Marathon Money chat all the time. I'm on there.
There we go. So, all right, man. Till next week.
Peace.
Peace.